A couple of forward-looking statement slides. We're going to switch over to copper. This is a metal that, of course, on the demand side is really driven by the electric vehicle revolution, the alternative energy revolution, the battery space. The real story in copper is more on the supply side, where grades have dropped over the last 10 years from 1% as the average open pit copper mine to now about 0.5%, which means you have to have twice as much throughput to make the same amount of copper. Codelco, the largest copper producer, has to spend $40 billion over the next 10 years to maintain their level of production. So that just gives you some ideas of what's going on in the macro space in copper. Currently, all investors are worried about trade wars and Brexits and things like that. So copper is not getting a lot of respect. Despite that, our share price has outperformed our peer group by a very, very large margin. And that's because we're delivering on what we are saying we're going to do, and because we're dealing with a quality asset. Arctic is a $1.4 billion NPV project at an 8% discount rate with a 33% IRR. I'll explain more about that. We're developing a district in a safe jurisdiction in a time when you see places like Zambia starting to do that creepy nationalization steps. That's got to make a lot of investors nervous. We're in Alaska, we're in the United States, rule of law, low tax rate, safe jurisdiction, and we're developing a whole district. Now, we're not doing this by ourselves. We're doing this with a series of partnerships that really help a junior company along. First is with NANA, which is an Alaska Native Corporation. And an Alaska Native Corporation that's been in the mining business for 30 years with the Red Dog Mine. They own the Red Dog Mine. Tech's been operating it for going on 30 years now. So they understand the mining space. We have a business arrangement with NANA. We've basically unitized our land holdings in the Ambler Mining District. They receive a royalty. We work very closely with them to develop the relationships with the local community. The second partnership is with the Alaska Industrial Development Export Authority. This is essentially a state-owned infrastructure bank. Their job is to build infrastructure in Alaska, which is something Alaska doesn't have a lot of. They are developing a road to connect the Ambler Mining District with the existing infrastructure in the state of Alaska, which is the Dalton Highway, which would allow us to truck our concentrates in the metal containers down to Fairbanks, and then transfer the concentrates onto the Alaska Railroad, another state-owned corporation, and then bring the concentrates down to the port in Anchorage. That process is underway. The permitting process has been underway for about 5 years. We're getting to the end game here. This year, the permitting timeline has been issued with the draft EIS scheduled for mid-July. The EIS, final EIS by end of October, and the record decision before the end of the year. So it's been a long road to get to this place, but we're seeing that finally coming to fruition. The third partnership is a financial one with South 32. Of course, they were spun out of BHP a number of years ago, but they were spun out without copper. So we are basically their investment in copper. We have an option agreement with South 32 that allows them to acquire a 50% interest in our projects by providing a check for $150 million in the joint venture bank account. That decision point is coming up at the end of this year. It was a 3-year option, and it's year 3. So by January of 2020, they will have had to make that option. We're working closely with South 32, and I fully expect that they will exercise that option, given the dynamics. This is a district. We're not just, the Arctic is a fantastic deposit, but we're really developing an entire district here, and the Ambler access road will access this entire district. So that's really the end game here. So let me introduce you to the projects themselves. So we'll start first with the most advanced project, Arctic. We're currently working on the feasibility study. These are the results of the pre-feasibility study reserves. You can see very, very high quality deposit, 43 million tons of 5% copper equivalent in an open pit mining scenario is unique. I don't think there's anything else like it on the planet. It's an open pit mine. So that's obviously a lot less expensive than underground mining. 7-to-1 strip ratio. Nothing that grade can't handle. These are the pre-feasibility study results. Asenco, AMEC Foster Wheeler, now called Wood, and SRK, they're all top-tier engineering companies, worked on this. $1.4 billion post-tax NPV at an 8% discount rate and a 33% post-tax IRR. So just a fantastic project. We don't need higher metal prices to make this an investable project. This project would be investable at $2 copper, and there are not very many companies that can say that. I mentioned about the fact that we're developing district. What we envision here is a central processing mill at Arctic for the entire district of polymetallic deposits. There are over 30 other known occurrences, half a dozen of which have historic resources. For an exploration geologist, that's pretty low-hanging fruit to come in here and do the infill drilling and do the work to demonstrate that you can haul that ore to the central mill. Basically, we've done some back-of-the-envelope numbers, and anything over 2.5–3% is going to make a lot of money, because you don't have to build a mill, you don't have to build a power plant, you don't have to build a tailings facility. So you're talking about a minimal amount of power and the haul distance into the central mill there. So that's certainly the vision for Arctic over the next 20, 30, 40, 50 years. At Bornite, we're still exploring Bornite. This is our camp. It's a great place to work. We're well set up. At Bornite, we've already outlined 125 million tons of 1% in an open pit. It's a different style of deposit than Arctic. The ore zone continues an underground mineable resource of 58 million tons, grading 2.9%. That was the state of the lay of the land, so to speak, before the South 32 agreement was put in place. With South 32's option money, which has been $10 million per year, so this year now we're up to $30 million that we've spent. In the past 2 years, we've drilled about 25 holes, continuing to infill and expand the underground resource in particular. This year we'll add another dozen holes as we spend the last $10 million option money. Most of the drilling has been taking place to extend the underground resource and to then infill the underground resource. We're still fairly wide spaced, 200 to 300 meter spaced holes, so we'll be addressing that with the drill program this year. I think this is an important chart to show, why you want to invest in Trilogy as a Trilogy as an investment opportunity for today. As we've talked about, the market's is pretty beat up. Our share price has performed well, but we still have a lot of value to add here, and that's because there aren't a lot of high-quality copper projects. Most of the copper projects out there are 0.3, 0.4, 0.5% copper. They're large, but they just don't have the grade, and they need higher copper prices to really make them investable. We don't. The higher quality projects were Nevsun's project in Timok in Serbia. That was bought by the Chinese for $1.4 billion. And of course, our partners, South 32, bought Arizona Mining, which was a high quality base metal zinc-lead-silver asset in Arizona. We think that's basically the end game here for us. Either South 32 buys this out or somebody else buys this out to get access to this entire district in a safe jurisdiction. Thank you, and if you have any questions, we'll be at our booth. Thank you.